Eating the Axis Bank numbers, well, if you have them, if you have the profit numbers, okay, net profit at 319 crore, that looks a rather small number. I mean, this is serious.
319 compares with 1,916.
No, I think they've taken a huge provisioning. This is like huge. Looks like they've cleaned it up once and for all, well and proper. No doubt the company did not announce numbers during market hours because this looks like a fairly serious cleaning up that the bank has undertaken. This is quite
Gross
huge.
NPAs at 4.17% versus 2.54. Net NPAs
16,378 crores. Abhishek, this is huge. So it's jumped from 9,500 crore to 16,000, which means it's about an 80% jump. It's an increase of about, what, 7,000 crores in terms of... that would be 80% almost, or 75% rise. And it's quite clear that the entire watch list has been taken, so to speak. You know, it's you're either standard or you are NPA. There is no question of watch. Seems to be the motto of the company. In a way, it's good if the pain is taken once and for all, but that will obviously mean a big provisioning figure of 3,600 crores, and that's why, you know, the operating profit compares well with last time's 4,400 crore. They've done 4,100 crore. So that is a four-figure sum. But from it, if you take away 3,600 crore of provisioning, then what you have by way of profit obviously is only 300 crore. So it looks like it's a one-time cleanup that the bank has done. One will have to see how the market will accept this. It will also depend on the management commentary. Do they say that we are over and done with? I don't know whether we have a press release following
NII?
this.
Okay.
Oh, yes, we do. Asset quality metrics rise driven by watch list. I'll just read it out to you. The bank's gross NPA, net NPA rose to 4.17 and 2% respectively. Watch list loans as on 30th September reduced by 32% and stood at 13,000 crores. So it has fallen from 20,000 crores to 13,000 crores. 7,000 crores have been taken off, and I think that's the GNPA rise, 7,000 crores. So that's what has slipped from the watch list to the NPA list. The watch list has reduced to 3.5% of total book from 5.4% earlier in June and 6.2% in March. So watch list reduced by half, and a large part of it has become NPA. Net profit, as we told you, therefore is only 319 crore, and that's because of a whopping 3,600 provisioning. Margins stand at 3.6%. That's not very bad. It is 3.8 last time, 3.6 this time. 3.64. So it's about a 20 basis point, 15 basis point fall. Other income has grown like it has grown for everybody by 24%. Advances have grown well, actually, 18%. That was what was expected. And it was led largely by retail, which grew by 25%. Current and savings account grew by 19%, and they constituted 45% of total deposits. Very good. So all those metrics look fairly good. Retail advances accounted for 42% of net advances, as they did even last time. I think it was over 40%. Retail fee income also has grown about 17%, constitutes 43%.
The slippage from watch list is at 7,288 crores.
No, that is what they said right at the bank in the beginning, Abhishek. Yeah. They've said that that is the first line of their press release. That watch list has fallen from 20,000 odd to 13,789. So that is really the big story. The watch list story is that it has fallen by about 32%.
The net restructured assets stood at 6,702 crore. The upgrades have come in at 1,073 crore. The write-offs were at 873 crore. So the restructured assets stand at 6,700 crore. That's another internal.
Another point to note is that they have sold assets to ARCs, about 2,316 crores, of a book value of 1,128 crores. So they have taken a consideration of close to 822 crores, comprising of 159 crore in cash and security receipts of 663 crores. So asset sale of 2,300 should be added to this 7,300. That will give you a total stressed assets that were formed in the current quarter, which could have turned bad. But
I don't think so. I think this 2,300 crore of asset sale was known. That is the SR Steel.
That is the SR 1600 odd crores.
1600 crore was sold. So that must have been in the watch list and sold off.
Yeah.
So you're right. Therefore, the total stress should be taken.
Total stress should be seen.
Would have been risen.
Yeah.
Yeah, quite possible. So you know, even if you took their total watch list, it was actually 22,000 crore if you also took their NFB, not just the loans, but also the guarantees and other exposures. It was about 22,000 crore. Now, we will have to see.
They have also mentioned that this 7,288 crores comprises 89% of the total corporate stress portfolios, which have actually slipped in. So, previous quarter, 2,680 odd crores slipped in from the watch list, and this quarter, 7,288. In fact, major cleanup of the balance sheet in terms of stressed corporate accounts have been taken care of, 89% now, and previously.
But you know, the provision coverage ratio has dropped from 72% in the March quarter to 60% in the September quarter.
No, that is arithmetic. It is only arithmetic, because in the first year of recognition of NPAs, you provide for only 25%. In the next year, you go to 30%. In the next year, you go to 40%. And the fourth year, it's 100%. This is the minimum required by RBI. Good banks, of course, even in the first year, will take 30-40%. But even then, when you have generated fresh 7,000 crore of NPAs, for that, you will provide only 30%, maybe 40%. So your average falls. But this is purely arithmetic. It's not as if the bank is up to some machinations.
No, next
this
quarter
is
it can
pure
increase.
arithmetic. Yeah, and these provisions are bound to increase when in the subsequent year they have to increase it to 40% and then 100%. So provisioning will continue, and that is going to be a big burden for all banks as you see the NPA picture bloat. In the course of the next 3 years, they will have to be provided for. So you are preparing for all those future years when cash will have to be set aside, and therefore there will be a strain on your profit, a strain on your retained earnings, and therefore your book value as well. But let's get Prakash Diwan to comment on this. Prakash, you heard the key numbers, which is really the gross NPL numbers, and to the extent to which the watch list also has been reduced by about 7,000 crores. Your thoughts?
That's right. So I think, Lata, very clearly we are talking about September numbers, which is not the period. July to September was not a period that had seen major changes in recoveries or any improvement, which is very significant. So from that perspective, the numbers are fairly in line with what was expected. But the exciting stuff is going to happen in the current quarter, where we said the October to December month. So having lightened themselves in terms of the burden on NPAs, they will probably have more flexibility to restructure some loans, in the current quarter. And given the repayment mood that is kind of coming into corporate India in a significant way, I would believe the improvement will be significant. But I would still not believe that they're out of the woods, because, this is deja vu with what happened to BOB when they said huge provisioning. We've probably seen the worst behind us. And then again, there were a couple of quarters that showed the weakness. So give it one more quarter.
Yeah, to be fair, they have not said that we are over and done with.
They have not yet said. No, I agree.
No, I take your point. We will have to watch for management commentary.
Correct. So that is going to be more critical. Where at what stage are we in terms of the U-turn on the cycle, the troughing out? But more or less it seems like the body language will tell us much more in terms of how they go ahead doing this. But the math very clearly makes it much more within reach of cleaning up even in the subsequent quarter. So it's not going to be such a big howler or something going ahead.
Yeah, they have still about 13,000 crores, which accounts for 3.5% of total assets. Assuming the entire watch list goes down, their bad loans will rise by another 3.5%, so that will become 7.5%. But even then, that is the total ring-fenced amount. We cannot assume that the entire thing will fall, but that is the worst case. And then the loans are growing by 18%. Would you therefore believe that, they will trough out?
No, so that's what I was coming to. The advances, the growth, the credit growth is definitely quite good, given that fact that the second quarter is never one of the best. And if you see the mix, retail, a lot of SMEs and not the large corporates, it's always going to be much better, because you'll have less slippages, at least going forward from this. It's not much of a issue for you. So 18% will take away the percentile burden, if not in absolute numbers, because that remains where it is. But I think the percentages will start becoming within, within striking distance for the bank. And what's going to happen, if you see the Kotak numbers, of course, you can't compare the two, but there's also a very clear sense that whoever has expanded the book through credit growth has been faster in getting their act together.
Prakash, Axis has been the rank underperformer. So
Yeah.
do you think the market smelt this, or do you think tomorrow the market will punish the stock for this?
No, I don't think there's more punishing that's going to be coming in. In fact, people would be happy to look at, the same kind of treatment which happened to ICICI. Of course, ICICI had the trigger of the I-Proof money as we discussed in the morning. But here, Axis also is the next big turnaround that you have, which is very imminent. Now, whether it happens after this particular set of numbers or you still have to wait for December is a matter of conjecture. But my sense is the market is quite happy to look at a turnaround and hence back it up with putting in some allocations to Axis. I don't think these numbers are ugly in any which way.
Okay. Abhishek, something you wanted to add?
Yeah, Prakash, they have clearly mentioned that 89% of their corporate stress have come out. And even in the previous quarter of about 2,680 crores slipped in from, the watch list. So clearly about 10,000 odd crores have actually slipped in from the corporate list, which should comprise major corporate restructuring or the stress portfolio out. You still feel that they have paid in the retail book that is left out there?
No, so what I'm trying to say is, it's difficult to conceive that or to perceive that the entire, poison is out of the system, because this quarter is not such. It's only the credit growth number that makes me believe that they are close to it if they're not at the end point of this. But this quarter never gets you those kind of, effective cleansing that you would need. It would only happen towards, the third and the fourth quarter when the corporates themselves are in a position to get out of this situation. So,
so you expect that third quarter could be another cleansing quarter, you think?
That could have the last vestiges, the residual this thing cleaning up, and that's what the market would want to know from the commentary.
Yeah, I agree with you. Mayuresh, how will the markets react? Already Axis has not performed. Tomorrow, what is in store?
No, evening, Lata. So largely, I think if you look at how the recognition has taken place, a large part, as Abhishek was mentioning, from the corporate watch list has probably got front-loaded in Q2. And we are always working with presumptions that they will front-load in this quarter and the coming quarter as well. So a large part of the stress on their balance sheet, specifically with the corporate book, should get recognized. Now, what it does increase the credit costs in the interim, and the management has been guiding around 150, 160 bits in terms of credit costs for the better part of FY17. So once this cleansing up process happens probably in this quarter that we've seen and the coming quarter as well to a large extent, I think the corporate stress from the watch list should go down significantly or almost get over. So again, I think I do not perceive that the market is going to take this negatively. The management commentary is going to be extremely important though.
What would you want to hear from them?
So largely, again, I think in terms of the watch list itself, I think is a large part of the watch list being recognized and whether there are any updations happening on that front. Secondly, I think in terms of the core business itself, what are they going to do in terms of the credit growth itself and the kind of operating leverage that can come through. And third, I think the credit cost guidance and again, I think the kind of funding in terms of the other sectors as well. Because the granular book on the other income or the treasury book is quite robust for Axis.
I think arithmetically it does look like their watch list has not increased. I mean, some of it has fallen into NPA. From the old 20,000 odd crores, it has come down to 13,789. So I don't think fresh entries could have been made into watch list.
That 20,000 you're talking about is funded exposure.
Funded. Non-funded was 22,000.
Non-funded was about
22,300. Yeah, that was
another
the total.
2,000 odd crores. So overall, it was at 22,900 crores. That has declined to 13,800 crores. Is what the management has mentioned.
So partly they have sold and
that's
partly they have recognized as NPAs.
Yeah, so 2,300 and 7,300, so
yeah, so
9,000.
around 10,000 crore it's fallen, and that gels with the
That
number.
gels with the
so
number
any
of
addition to watch list is, I think, unlikely. Whatever they watched, they continue to watch. there aren't new dangers or red flags. Would you say that we can come to that conclusion?
Last quarter also they added about 340 odd crores in their watch list.
We can take 300. I guess
So
it will be
overall, yes,
0.03%.
the major portion of the cleaning up act, or you can say whatever stress was there in the portfolio over the last 4-5 years has actually been cleaned up. And they had been guiding, Q2 we will front load and our credit cost will rise. But I don't know, in terms of expectation, was this number expected or was a number below this expected? That needs to be seen from the body language of how the management takes this into stride and the way they guide
I agree.
ahead.
Guidance will be all important. Mayuresh, you buy the stock?
We do like the story, so I think the management commentary will be keenly watched. If they direct, as I'm saying, that there's no addition to the watch list, I think a large part of recognition has taken place. My own sense is that FY18 numbers with fall in credit costs, with increase in credit growth, and again expectations of leverage playing on their balance sheet because of the good capital adequacy that they're already maintaining. I think the stock should deliver good numbers on ROAs and ROEs going forward. So yes, management commentary crucial if it sticks by what it has been saying, and again it guides to a positive Q3, Q4, and the next fiscal year as well. I think if the stock declines significantly, we are buyers into this.
Buyers at dips. Prakash, you buy at dips?
No, not yet, Lata. I would definitely want to give them one more quarter. And this positive news of what the finance minister hinting at, I don't know how soon it's going to get implemented. Those are what I would look at as triggers rather than just the numbers at this point.
Fair point. All right. Mayuresh, Prakash, thank you very much for joining us. Thanks, Abhishek, as well. The story from Axis Bank is that it was a howler of a profit number, but behind that very low profit number lies some good work, cautious work that the bank has done to recognize some of the stocks, some of the loans in their watch list as default loans that won't be paid back, and providing for them a recognition of the problem always is one step towards resolving it. So perhaps the markets will take kindly to this kind of performance of the bank in the second quarter.